This week at the zoo, the Nasdaq index fell over 3% ahead of the Labor Day weekend, with Apple and Tesla leading the way down. Hello and welcome back to the Wall Street Petting Zoo. This is our This Week at the Zoo segment, in which we review the market news for the previous week and look ahead to the coming week. I'm Christopher Smith.
And I'm Robert Coburn. The market sell-off this week came despite some pretty strong economic data, so let's start there. First of all, the jobs numbers this week were pretty good, with initial jobless claims, continuing jobless claims, and the August unemployment rate all beating expectations by a comfortable margin. However, that's partly because the Labor Department changed how it calculates the numbers. So we've got to keep watching the trends to see if this improvement is real or just a function of how they're doing the math. We also got a bunch of PMI survey results this week. These are surveys of company executives that measure business activity in different sectors. The manufacturing sector in August looked especially hot, with some of its highest readings in 2 to 3 years. Export orders increased, partly thanks to the weak US dollar, giving international buyers a better exchange rate to buy from US factories. Also showing strong growth in August were leisure and entertainment, healthcare, utilities, and financials. The leisure and entertainment sector is benefiting from economic reopening, with AMC reopening 70% of its US movie theaters this week. One sector that didn't look so hot on the PMI reports was technology. The tech sector is still growing, but its growth slowed in August. The construction sector also shows signs of slowing down, with mortgage applications, real estate transactions, and lumber prices all falling this week. Now that Russia has a working COVID-19 vaccine and the US is close to a vaccine as well, the work-from-home bubble may begin to burst.
Yeah, we saw the first signs of that bubble bursting this week. The Nasdaq, which is a very technology-heavy stock index, started this week with about a 3.5% gain by Wednesday, but then it sold off sharply on Thursday and Friday, plunging about 6.5% in 2 days. The construction sector took a beating, with lows down over 8% in 2 days, and the pharmaceutical sector got slapped down as well, with COVID-19 vaccine maker Pfizer down 6.5% on news that the Russians have beaten them to a working vaccine. But big tech companies took the largest losses, with Apple and Tesla closing the week down 10 to 12% from Tuesday's close. Apple may recover next week, but there are probably some lean times ahead for Tesla speculators. Tesla issued $5 billion of new shares on Tuesday, which dilutes their existing shares. On Thursday, SoftBank got exposed for buying huge amounts of Tesla option calls in order to game trading algorithms and manipulate the stock price upward. And after the market close on Friday, Tesla was rejected for inclusion in the S&P 500 index, which means it will lose out on $100 billion of new passive investment. So the stock dropped over 6% after hours on Friday. In my opinion, the Nasdaq and especially Tesla are still very overvalued at this price. I think for the rest of September, we're going to see some heavy rotation out of large cap growth technology stocks and into small and mid cap value stocks, especially in the leisure, travel, financial, and manufacturing sectors. Let's talk stocks we watched this week. What are you watching, Robert?
Speaking of Tesla, although I did not mention it on last week's episode that I was watching it, I was actually watching Tesla and Apple due to their stock splitting. I saw a couple people urging others to buy up shares as they deemed it a good opportunity to get in, which I thought was a bad idea because usually stocks dip shortly after a split, which would then be the better buying opportunity. And as Chris just mentioned, Tesla and Apple ended up closing the week down 10% from Tuesday's close. So now on to what I did mention last week. So I was watching Zoom, and their report was phenomenal. This caused the stock to jump over 100 points, surpassing the 460 mark, before it came crashing back down at the end of the week to about 360, so only gained net about 60 points on the week. Their quarterly earnings report cited that they averaged just shy of 150 million monthly active users, That's up nearly 5,000% year over year. Now, as good as that statistic looks on paper, not every one of those active users are paying customers. So Zoom does offer free tiers, and attendees for meetings don't need a paid license. So take that stat with a grain of salt.
I was swing trading Gilead Sciences last week, and that closed a little over 1% higher for the week. So I definitely outperformed the market on that trade. Bad week for the market. But I didn't make any huge gains on Gilead Sciences, and I've already gone ahead and taken profit because the stock just hasn't moved upward with any conviction, and it violated its trend line a little bit. So I don't really know what it's going to do from here. I was also watching for HP to dip low enough for me to buy some more shares of HP after its stellar earnings report a couple weeks ago. HP did dip this week, but it didn't get low enough to trigger my buy order yet. I was looking to buy some more shares at about 18.80, and the lowest it got this week is $18.92. So I'm going to keep watching HP for a buying opportunity next week. How about this coming week, Robert? What are you watching?
This week, I will be watching Kroger, which will announce their quarterly earnings on Friday. Now, you may not recognize the Kroger name itself, but you may know of their chains, Food for Less, Fred Meyer's, Ralph's, and Fry's, or just to name a few. And they also own the popular meal kit service Home Chef. Their stock has been on a slow upward trend since July of 2019, and I believe this is a good long-term stock to own. Will they grow like Zoom? Highly unlikely, but it could potentially go back above the $40 mark, which it hasn't done in almost 5 years. What about you, Chris? What are you going to be watching?
Well, I'm going to be watching financials and insurance, especially Allstate. Allstate is a standout value in the insurance sector, and it's been going horizontal since April, but sentiment has been improving on the stock, and it's gotten a lot of analyst upgrades. On Thursday morning, I noticed that both Allstate and an S&P 500 insurance ETF popped upward through a trend line before pulling back later in the day in sympathy with the rest of the market during that end of the week market sell-off. And I think that this sector will follow through with its upward move in the coming weeks. It's pretty common for a stock to make sort of initial attempt to break through a trend line before pulling back and then ultimately follow through on that move. So I kind of expect that from Allstate and from the insurance sector. I'm also interested in Intel, even though the tech sector is looking a little bit weak right now. Intel is a standout in the sector because of its cheap valuation and its announcement this week that its new Core i11 processor outperforms AMD and NVIDIA products for gaming. A lot of investors seem to think that Intel is a dinosaur, and they have priced it accordingly. Intel is trading at about 9 PE right now, whereas AMD is trading at like 160 PE. So people are paying quite a lot more for AMD than they're paying for Intel. But I believe it would be a huge mistake to count Intel out. Intel is still, I think, sort of the high quality chip maker. And it's got lots and lots of patents. So I think that we will see continued innovation from this company going forward. All right, folks, if you heard anything on the podcast today that you found useful, please give us a like, share, or comment on YouTube. You can subscribe to us on YouTube or on your favorite podcast app. We're syndicated through Podbean and also through iTunes. If you would like to support the podcast financially, you can go underneath the YouTube video, and we've got a referral link to Webull. If you open a Webull account and deposit $100, you get some free stocks. We also get some free stocks, and that helps support the podcast. We really appreciate you listening, and your support is the only way that we get the word out because we don't do any paid advertising for this podcast. So anything you can do to help get the word out to your friends, we would really appreciate. Thanks so much for listening, and we'll see you back at the zoo next week.
See ya.